Okay, good afternoon, everybody. Good afternoon, and welcome to Paul's Money Market Update 180 for Monday, 7th of April, 2025. I hope you're all well. I hope you're enjoying these rather volatile and historic times. As always, just before we begin, for those of you joining us for the live session or joining us on the YouTube live stream, it'd be great to know that you can just to confirm that you can see the slides and hear my voice. Just make sure the technology is working in our favour. Listen, it's been a rather eventful few days, hasn't it? So, firstly, I was in London Thursday and Friday, and maybe that's why markets dropped. There you go, no ego there whatsoever. But for those of you who joined us at the IX Trader Show last week, it was great to see you there. Thanks very much for coming to my sessions, and thanks very much for the conversations in and around and afterwards. Great to see everybody. For those of you joining the Monday Market Update for the first time, it is literally just that. It is me flying through as much as I can cram in the next 30 minutes, just looking at the strength and weakness within FX markets and indices and commodities markets, just looking at a few charts of interest, and then looking at the live markets. It is not a signal service. It's not trade recommendations. It is just me, okay, covering what is of interest to me and might be of help or relevance to yourselves as well. As always, you're very welcome here, but just remember that you are always responsible for your own trading decisions. And this week we'll be looking to start the VTP tag, the Trade Accountability group. So if you think you would benefit from actually having being part of a small group just to help keep you accountable, especially in these rather volatile times, well, you can join us there. You can either ping us or look at those QR codes there, okay, and that will take you to the details. Furthermore, if you want a little bit more insight and education, 2 o'clock this afternoon at London time, I will be doing the Monday Market Matters webinar for active trades. This week is on how best to use moving averages. Once again, you can register on their website or use that QR code to join us. And Wednesday evening, I will be doing a UK focused weekly update for Admiral Markets. Once again, you can either use the bit.ly code or the QR code, or just go on their website if you want to join us there. As I said, I suspect it's going to be a rather interesting week with lots going on. Okay, so let's dig into the main element of what we're particularly looking at here. So this is the STAM. It is part of the weekend analysis that I do for my own model, where I'm always looking for where's the strength, where's the weakness, primarily in FX markets, but also in indices and commodities markets. That in its way is what helps me allocate my time, energy, and resources to the best way. So, what is this telling us? Well, I'm sure pretty much even if you haven't really been active in markets, just watching the news, okay, watching social media, you'll have seen that there has been, of course, a flurry of volatility and price moves based upon the Trump announcements last week, and they really kind of accelerated on Friday, and then for those of us who were up all night, well, not up all night, but watched the openings of futures markets and FX markets last night into this morning. And it was a rather eventful start to the week, but more of that later. What is the STAM telling us? All right. Well, here we are. We are into week 15 of the year for the 7th of April. And where's the strength and where's the weakness? Well, the strength has basically gone towards the Swiss franc and the Japanese yen. And the weakness is still in Aussie and Kiwi. That shouldn't really be too much of a shocker. That is really giving a very, very clear insight that we are in a risk-off environment, okay? Swiss franc, Japanese yen, still seen as safe havens. So, of course, flows have just gone into there. And, of course, Aussie, Kiwi, etc., normally seen as risk-on currencies and stuff. And so no surprise to find that they are still languishing at the bottom of the STAM. So that is, if you didn't really already know it, the STAM is just reflecting, this and, in terms of this absolute risk-off environment and sentiment that we find ourselves in at the moment. And certainly, if we look at how FX markets have acted since they opened last night, well, once again, you're just getting further confirmation that with Swiss franc and Japanese yen, where particularly they have strengthened the most over since markets opened last night. Although interestingly, I my sort of intraday model had me sort of selling Swiss and buying sterling and dollar this morning, which worked out well. But we'll look at that a little bit. Look at that a little bit later. The overall, as I said, the overall longer term trend and sentiment is definitely in the kind of the risk off. Will it stay like that? Well, the reality is that the reality is a lot of that is going to be get driven by Trump and Bessent and the I forget his name now. They look back, see his chap there, the Commerce Secretary, okay, and what their plan is. Um, the reality is that they've confirmed that those tariffs are still coming in the door, okay, at from the 9th, is it? So that will be what, Wednesday, and that invariably that's going to have an impact. And as we're going to see in a moment when we look at the markets, that has had a huge impact on markets there, and for some people, that will have caused all sorts of troubles. For others, has been some opportunity, and we'll look at that in a little bit more. When I look at the individual currencies, no surprise to see that there's still an element of strength there in the euro. Okay, sterling has kind of fallen its way down the pile there. Those of you who've known me or been here for the last few weeks, we talked about this. Okay, this has been coming. That basically there's been a little bit of a rug pull on sterling after the UK data, spring statement, tariffs, etc. Even though the tariffs, on the UK are not as heinous as let's say our European neighbours and others and stuff. We're still already taking a little bit of a battering from it in that sense, and we can see that. So that is going to be the theme of the week, all right, in terms of how markets react and continue to react to this kind of the Trump tariffs and what, if any, shenanigans that the Trump administration will get up to, okay, in terms of putting them on pause again or changing them, etc. People yanking people's chain, basically. So we will look at that and see what that's telling us in the market. Certainly, we'd already talked about this last week. The kind of a big American indexes, they are strategic sells. Okay, DAX has been a tactical sell, and we'll look at that in a moment. So that's kind of the way that's played out. But no surprise, basically, FTSE and in particular Nikkei, all right, has been a strategic sell along with ASX. Uh, Gold remains bullish, okay, and the price action has been interesting there over the last week. We'll look at that in a moment. Silver has had a rather volatile few days there. Okay, the VIX the VIX is bearish, and in fact, went much higher in the VIX numbers. We'll see if that subsides going into it. And interestingly, Bitcoin, okay, Bitcoin has continued to slide there. I mean, it is a real risk off, okay, sentiment across the board there. And that, you know, if you're a market operator, that shouldn't really be much of a particular shock to you. The question is like, well, how do you turn that from a threat into an opportunity? And we'll have a little look at that in a moment when we switch to the live markets. So yeah, risk off across the way for the moment. Let's have a little look at some charts of interest. I'm only going to do, I think, 3 this week just to keep it a little bit tighter because I think actually looking at the live markets is probably more use because of, things are changing and unfolding as we speak. In spite of all the Trump noise that's going on, we do actually have quite a bit of a busy week happening. We actually got good numbers off NFP last Friday, and then we have Kiwi news, and we've also got CPI data on Thursday, along with the FOMC meeting minutes on Wednesday evening. And of course, we had talking of the Fed, we had Mr. Powell speaking on Friday, and I think people thought that Trump was putting pressure on him to cut rates, and he did not. But rates becomes the thing that's of interest to us all. So this is a chart of the 10-year Treasury yields, okay, US government bonds. Why is this of interest? What's the relevance? Well, what people have to realize is that the Treasury Secretary, Mr. Bessent, he is not a central banker. His background is hedge funds. Okay, he is not from Yellen's little tribe, so to speak. He's a hedge fund operator. Okay, so he has a different set of eyes in terms of what he's looking at, and in particular, America, to my understanding, and I don't consider myself a bond expert or fixed income expert. Okay, there are some fantastic voices out there that can help you. But my simple, superficial understanding is that the US government has a refinancing issue. Okay, in that they have, I think it's about $6 trillion needs to be refinanced, and of course, rates are higher than when those particular debts IOUs were issued, and so of course the important thing, all right, for Trump and Besant is actually it's not necessarily the stock market; it is about getting yields down. So when they come to refinance, that makes a considerable difference. So, how do you put that into some sort of perspective? Well, let's get the old drawing tool here. So they came in, all right. Trump came in. I think it was around about here, sort of, end of January there, and as you can see, the yield on 10-year debt was, I think it was about 4.63. All right, 4.63, and on Friday it closed at 4. Okay, so 63 basis points, all right, has dropped since Trump took over. Well, you might be saying, well, what does that mean? My understanding, once again, it's a very simple, superficial understanding on my part. There will probably be people who can explain it better. Is that every basis point, okay, every basis point lower saves the US government $1 billion when it comes to refinance. So there's 63, okay, 63 basis points at the moment. All right, we actually gapped down this morning in the open, but have come back up to around about 4. But that 63 has probably saved them about $63 billion in refinancing costs. When it comes to refinance that $6 trillion of debt, some might say, you know, you've saved $63 billion in refinancing, but you've wiped off nearly probably somewhere between 2 and 3 trillion debt from 2 and 3 trillion dollars from the stock market. Was that a good trade? And I'll let others debate that. But the reality is that's what's driving Trump and Besant, okay, and that's why they haven't shown as much interest in the stock market as perhaps maybe people were expecting. People were perhaps expecting Trump to come out yesterday and say something to sort of basically give people a little bit of a pump, a little bit of hope, but it wasn't there. So what we need to be doing is, as I said, watching those 10-year yields and see where that takes us. All right. So as I said, close about 4. People will be interested to see how it plays out this week. And as I said, it's a very superficial, simple, superficial way of looking at it. But every tick saves the US government $1 billion in refinancing. And that, as I said, that is my simple understanding, and that's why we're sort of being driven the way we are. Talking about yields and finance, this week on Friday, in spite of everything else that's going on, we also have the start of the Q1 earnings season from sort of Friday. And in particular, on Friday, we've got quite a few of the big major American banks. All right, so I think it's JP Morgan, BlackRock, Wells Fargo, Morgan Stanley, Bank New York Mellon. Okay, I think them and maybe one or two others there that are reporting their earnings on Friday. And so here, this is the weekly chart of JP Morgan, JPM. All right, JP, you can see here. Now, I think we talked about this a while back, and I was curious because, we had been in a fabulous trend, and then we ended, there, okay, with a bearish key reversal. Okay, having sort of, having broken this kind of the structure, we pushed a little bit higher, printed this bearish key reversal, and we've not really looked back, have we? We dropped beneath, bounced off the 50, came back up to the 20, and this is what this is VTP stage 1. All right, 20 power of 20 period moving average. It's switched from support to resistance, and now we've kind of flown through here. Okay, we've flown through the 50, and we closed way beneath 50. The pre-market we're already down another $5. You can't help but think that that big round number 200 is now probably going to act as a magnet. What, of course, also people are focusing on is Jamie Dimon sold out, I think, something like about 240, was it about $240 million of his own stock in JP Morgan about 6 weeks or so ago. So it might be said that people could look at that in a rather interesting manner, all right, and saying that he was getting out before this pain came about. But anyway, you're going to look at that and look at. I think what will be interesting is people will be interested what those numbers from those financial companies on Friday, are. If are they good enough to give a little bit of respite to this basically to this sell-off. If they are not, that in itself does not bode well, okay, for the next few weeks. Am I right? And we'll look at the charts in a moment to see how we can make sense of that. But certainly look at that JPM. That's a quick move over. And my scenario would be that we probably drift to 200, and then we look to see if there is support at the big round number. That's what I'll be looking at over the next day or two. And next one, BlackRock. Okay, they are, as I said, they've got their earnings on Friday as well, of course, and not dissimilar to JP Morgan. Okay, in terms of there had been a bit of a strong trend. We'd got up above $1,000. All right, okay, which considering we were here, okay, just at the end of 2023, over the 18 months, going from $600 to north of $1,000 was quite some run. But once again, I think we talked a little bit about this in terms of we kind of printed a real double top there, didn't we? With we'd be looking at that kind of neckline at around about 950. And we had been flirting around it. Okay, we got beneath the 20. We bounced off the 50 the first time, but here, okay, the week before, we just basically lower highs. Okay, lower highs, rejection candles, and then as you can see for yourself, okay, we slid away, cut through the 50 period moving average like a knife through butter, but that pretty much was for most instruments last week. And there, we can see that already there, okay, that even though closing at 822, the pre-market has us at 800 today, etc. So that's quite some gap down. We'll be looking. So we are going to be expecting a fair few gap downs, I would suggest, on pretty much all of those kind of major US assets and major US stocks, all right, when those markets open in a short while. And we'll look at in a moment exactly how that impacted the currency markets when they opened last night. But listen, you can see for yourself those three charts, all right. They tell us a great deal. The STAM is telling us a great deal. It's just confirming what you can see with your own eyes and what the media is telling you. And I appreciate that for many traders, if you're at the start of your journey, it might appear a little bit intimidating or a little bit overwhelming, or you might be sort of beating yourself up thinking that you should be trading this. And the reality is that these immense surges of volatility, okay, they can be very difficult for traders to trade, even if you know the direction, because of the volatility. And certainly in VTP stage one call tonight, that's what we'll be talking about. The impact of trading in volatile bearish markets. But as I said, this just becomes about managing risk, keeping on top of the news flow, the order flow, and ensuring that if you are trading, that you keep the powder dry just for the very, very best of trading opportunities. All right, so there was a few charts of interest. Let's have a look at the live market. So so just bear with me, and we'll switch across. Okay. Okay, so I'm hoping that you can still hear me. I'm hoping that you can see the charts here. So this is my indices profile. Bang, here we go. Dow, Nasdaq, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. And so you can see I've put them on the daily charts here, okay? Because what we're interested in is, you can see this was all the Thursday, Friday action. Okay, Thursday, Friday action there across those major indexes, and you can also see, we gapped down. Okay, and of course these are the sort of versions of the electronic futures. All right, so these are the gaps down that we saw in there. What we can also see is, you can probably see is, remember, this is a daily candle, so we pushed down overnight, but we've come back a little bit today. Okay, in fact, I would say the European session, certainly on these indices, was not as volatile as I had expected it to be. Now, of course, that could all change when we see the American markets truly open in a short while's time, in about 90 odd minutes time. So remember, these are all bullish pin bars, but this is a daily candle, hasn't completed. All it's doing is giving us a representation that so far this morning, having pushed down, there has been actually some bullish support even for the Nikkei, okay, which had been leading the charge down. Even oil, which had slid away and actually had slid beneath 60 at the moment, is kind of holding up above it. We'll see how that ends there. And if we look a little closer to home, let's have a look at the DAX. I'm interested in the DAX because, of course, the DAX has been has been in a fantastic uptrend there. Okay, so of course, Every man and his dog is just here we go. Just there we go. So this is the DAX on the daily. Now, those of you who'd been joining us okay every week have been talking about how, we had a great trend on that daily chart, you can see, but we had double topped here. We double topped there, bosh. And then we had this kind of neckline here, shelf, and we were talking about actually, the how price was responding around the 50. And as you can see, boom, it's gone. And what we're looking here, down to 20,000 today. We gapped down there, okay, and we pushed down to just 19,000. Have come back up there. We're up there just under what's that about 19,786 there. As I said, there is still a bit of a gap there, and of course, a lot of the rhetoric over the last few days has been about the Europeans wanting to retaliate, and actually come back with harder tariffs against the Americans. And I'm going to be curious this week to see what do they actually do, because politicians' rhetoric about wanting to be seen to be strong against Trump and an anti-Trump position, and the actual impact upon certainly for example the European economy, and in particular the German economy, which is an export economy and exports a huge amount to the US. I will be interested to see who wins out. Okay, who wins out? Do the politicians win out? Okay, and get to grandstand again like they did about the defense and infrastructure commentary? Do they get to win out, or is there a case of that the let's say the calmer business heads sort of stand in place and effectively do not retaliate, basically look to find a way, a deal of some sort to work around it? And I think that will have an impact on the DAX. Okay, we'll see that this week as we start to get an idea of who's really pulling the strings there, and how does that impact markets. So it's been a fantastic sell-off if if you take a note and being short. But as I said, this week will be interesting to see how they look to really play that out. And then, of course, a bit close to home as well, the FTSE, not as pretty in terms of trends as the DAX, but a really quite sort of scruffy, poor, sort of head and shoulders there, that we've seen broken and rolled over. We talked about this a while as price had just literally been going sideways in the run into that spring statement, but you can see, bang, we broke. Not only that, we're through 8,000 here and continuing, okay, gapping down, all right, and continuing on, etc. My own personal view is that we have been hit with 10% tariffs, okay, excluding the automobiles, but standard 10% tariff, the best that possibly could be compared to everybody else. But that should be an advantageous opportunity for us. But I have no doubt that Starmer and Reeves will turn it into, they will somehow manage to grab defeat from the jaws of victory and basically screw it up for us. But there you go. As I said, that's just my personal opinion. Others may differ, but all we're looking for is, well, you can see what the story is there. Head and shoulders reversed, fallen away. Okay, would you be a buyer? Okay, I don't think we are fully yet here in terms of complete capitulation. I think there's probably one or two more shakes left before we start to see, see the scores on the doors. How is that playing out elsewhere? Well, if as I said, gold has been interesting, but gold weekly chart, fantastic uptrend. But last week was it's a bearish rejection candle, and people might be saying, "Well, hang on a minute, Paul. With all this uncertainty, why aren't people buying more gold?" And the reality is that there will undoubtedly be a lot of institutions and organizations who have effectively over leveraged themselves and are probably in a terrible position over the last few days, and they are probably getting margin called or trying to avoid a margin call from their exchange or their broker, and they're trying to avoid it because the reputational damage of getting margin called as a financial institution just means that, well, the business is done anyway, which means that you effectively need to have you basically need to sort of sell off the good to basically to cover up for the bad. So I suspect what we're probably seeing is that lots of institutions having to cut their gold positions because they need those profits to basically avoid a margin called in their other positions. Hence why, even though we saw all of that shenanigans, you can actually see for the last couple of days, that kind of Thursday, Friday, we still had sell-off in gold, came back to 3,000. Price action's been curious here this morning. If we go down just quickly to the 30-minute chart, We gapped down from Friday, came down to 3,000, big run number, and then we pumped our way up out of it overnight. And then I'm curious because literally the 20, that's PO20 there, okay, for VTP people, it's PO20 there, and that's just holding up. And so I'm going to presume that there's a bit of a base there at 3,000, okay, that people are working towards. Silver was even more volatile. Silver on the weekly chart, we had been talking about how we were grinding our way up, grinding just our way up, and then you can see for yourself last week, we had a real proper sell-off and a sell-off that closed beneath 30. Now, remember that the thing is, silver does have some genuine industrial use. So if there is if everybody's terrified that global markets and global economies are just going to go into recession, people worry that they think that there'll be less demand for silver. And as you can see, that's basically where we find ourselves now. This week we've started a little bit like gold in terms of we've gapped down, okay, gapped down, and we've come up and filled the gap. And once again, that 20 period, which was lovely resistance on Friday, it's flipped to support. Okay, so we're holding above 30. Let's see what the US Open brings us with silver. And as I said, Bitcoin here. This is the Bitcoin weekly chart. We talked about how we'd broken that ledge and sold off. We pulled back, okay, formed basically lower high, and we're down here at the 50 armor. That's where we're beneath 80. We're down at 50. So is that 50 period moving average, which acted as fabulous support last year, is that going to continue, or are we going to work our way? Because if we do, then I think 70,000 would be, for me, be the next level. So, this is just once again a reflection of overall sentiment. All right, so whilst that's doing, we've had a look at that. Let's have a little look at, we'll have a little look at the dollar, and we'll have a little look at maybe Swiss franc and sterling. We might run over today. I hope you forgive me. It's just, as you can tell, there's an awful lot going on. So, as I said, I'm always trying to fly through, trying to push as much as I possibly can your way in terms of giving you a little bit of help and insight. Apologies. I've always got about bloody half a dozen different packages running and working and stuff. So sometimes that slows us up a little bit. But yeah, here we go. Here we go. So bang, dollar profile here. Aussie dollar, Kiwi dollar, Euro dollar, dollar Canadian, pound dollar, dollar Swiss, dollar yen, dollar index. So I was interested in what I was interested in was I was watching this last night, okay, and maybe I'm not drawing it in as very well, but what we were looking at was that basically we had gaps. Okay, bang, the dollar gapped up against pretty much all of the majors, except the Swiss franc and the Japanese yen. So here there's a gap down, which means dollar weakness, and yen strength. Get here, gap down, which means that it was basically dollar weakness and Swiss franc strength. Once again, that is just reaffirming what the STAM was telling me at the weekend, what my other indicators in terms of currency strength were telling me as well. It's just reaffirming that we were in that kind of risk-off sentiment, and risk on currencies are being sold away. But the interesting thing I found is that, and that's why we're on the 4-hour chart here, is that really since that, for the most part, if you look at that, we've pretty much gone sideways, okay, for the most part, all right, for the most part. As I said, I had a nice couple of intraday trades on dollar Swiss and pound Swiss this morning, but I'm hoping you can see that even there, so far, having had that, it's almost like it's a little bit of calm, all right, a little bit of, is this the calm before the storm, all right? Is this a case of just a little bit of lull as everybody tries to work out, whether these tariffs are good for the dollar or bad for the dollar? We shall wait. We shall wait and see. Okay, so we've got there's no major official data coming out today or tomorrow, but you can bet your bottom line that every man and his dog, institutions was probably in last night on their desk on the trading floor covering this, and are probably also just going to wait and see any sliver, any small commentary from Besant or from Trump will have a huge impact. But I found that interesting. There was a little gap, but actually we've kind of gone sideways since then. All right, there's kind of the dollar. Everybody sort of, as I said, is just sort of scratching their head and taking a moment, and we'll wait to see is it the calm before the storm. This is Swiss franc profile here, so not a surprise here. dollar Swiss, okay, daily chart, bang, pound Swiss, bang, Aussie Swiss, hopefully you can see a CAD Swiss, okay, Euro Swiss, Kiwi Swiss. There we go. So, that's telling you there's the daily over the last week. All right. That is Swiss franc strength. And to add to that, Swiss franc against Japanese yen, that has strengthened against the yen. So, as I said, it's just reaffirming that fact that Swiss and yen, the two safe havens, are top of the pile at the moment, but also Swiss is stronger than yen at the moment. That's what that's telling me there, and that's what I'm looking at. Okay, so I'm just I'm using technicals to give me a fundamental and a sentiment insight into the markets. Okay, you hear me talk about this all the time. This is the way I use these to help me build an overall picture that allows me to basically to work with. Buy strength and sell weakness. Simple as that. All right, let's finish with sterling, shall we? Okay. So as I said, I apologize for overrun a little bit, but there's always plenty for me to share with you and have a talk with you about. Okay. So all right, let's bring up the sterling. Okay. Sterling has been interesting. Let's what we've got here, bang, just a snapshot. Pound against dollar, euro sterling, pound Aussie, pound Canadian, pound New Zealand, pound Swiss, pound yen. All right, there you, as you can see there yourselves. Okay, I'm just going to put these up to, yeah. Okay, so once again, all right, what's this telling us? So very quickly, look at that. Pound against Aussie, pound against Kiwi. Okay, Aussie and Kiwi bottom of the pile. Canadian dollar, okay, though, has got a little bit of strength there. And if we look at cable in itself has been very strange. I've got this on the daily chart because the initial reaction here, I think we talked about this last week, is we were up at 130, but I was saying there was not really, the price action wasn't telling me to sell off there. There was, the price action wasn't really bearish there. It was just basically tucked underneath 130, but between a kind of 129 and 130, the initial reaction, we pumped our way up, but then look at that, we came all the way back down to 130 and beneath, and now we're trading beneath it. And as you can see, we had the gap there. We had the gap there, okay, small gap. This is the 30-minute chart now, and then basically we filled it this morning. We kind of bounced off the 30 and the 30-minute 50, okay, which is quite a nice intraday way. And you can see for actually most of this has just been dollar strength and sterling weakness there, okay, in that sense. So kind of, that's the picture we've been getting there on cable. And then I said, if I look at pound against yen, well, you can see that's just basically the last few days, bang, that's yen strength, all right. Sterling weakness, pound against Swiss franc, okay. Remember, I've been talking about how this has just been going nowhere and doing nothing, but you can see over the last few days that has changed. That is that Swiss franc strength, that safe haven strength, sterling weakness there. And interestingly, euro against sterling. Okay, let's do this on the weekly chart. You've heard me bleating, all right, how we've been working our way down. The weekly 50 had acted as great resistance, okay, but we talked about how this was the low at last year, this was the recent low, and that low was higher. And then recently we, I talked about, was this like a bull flag? The 20 period moving average, which had been resistance here, had turned into support as a rejection candle. And you can see last week, bang. And that's that just effectively. If I go to the daily chart, there you go. That is that kind of euro against sterling. So euro is strengthening against sterling. I said sterling was always going to be weakening. The interesting thing I take from this is that, I know politicians have been going on about how, that's fantastic that euro has been strengthening against sterling and the dollar, etc. My own view would be, if you're into a trade war, do you really want your currency strengthening massively, especially if if your country is mostly an exporter and it effectively, it is going to already be struggling? Is it really what you want to have your currency strengthening even more? But anyway, I'm sure there's analysts far smarter than me that can debate that. All I do as a trader is look at, right, well, where's the strength, where's the weakness, and try and ride it. And certainly there is clearly euro strength there. Okay, ladies and gentlemen, let's draw it to a close there. Okay, as I said, I appreciate that flying through it. Okay, I appreciate that it's we're trying to cover as much as I can, especially in these volatile times that we find ourselves. As I said earlier, all right, the volatility isn't over. We are going to have an interesting week. So make sure that you are managing risk, make sure that you are on top of the news flow, top of the order flow, and that if you do trade, that you are managing risk and that you are keeping your powder dry for the best trades. If you're completely new to trading and investing, you know, there is nothing wrong in sitting on the sidelines and just watching how this plays out and using it as a learning experience. There's nothing wrong with that at all. So for all of you, have a fabulous trading week. Okay, for those of you on VTP, the stage one call will be tonight at 7. And as I said, we'll talk about volatility and trading bearish markets. For everybody else, have a fabulous trading week, and I look forward to speaking to you soon. Take care, everybody. Cheers. Thanks, guys. Appreciate it.